Hello everyone, welcome and thank you for attending your development live market briefing dedicated to the NAND market and Kioxia IPO. My name is David Jordan and I am Global Sales Support and Coordination Manager for your development. The aim of this live market briefing is to provide you with a 30-minute market update with a focus on COVID-19 and Kioxia IPO impacts. Our NAND expert, Walt Kuhn, VP of NAND and Memory Research at Your Development, will examine the changes to our market outlooks in the context of our prior forecast and what he sees as the most likely outcomes during these very uncertain times. Our data and analysis are based on our NAND memory monitors and the status of memory report. So before we get started, let me remind you that you can submit questions to our analysts during all the live event using the Ask a Question window at the bottom of the screen. Questions will be answered right after the presentation. In case we don't have time to answer all of them, we will follow up with you by email. To conclude, this live event is recorded and you will receive tomorrow an email with the link to access the recorded session. So let's start the webcast and welcome Walt. Walt, the floor is yours.
Thanks, David. Thanks everyone for joining. For today's presentation, I'm going to provide a brief NAND market update, followed by an overview of Kioxia's competitive position in the context of a potential IPO, and then time permitting, we'll take some Q&A at the end. I've got a ton of material to cover in a short time, so let's just jump right in. First, let me provide a brief background about myself. So I'm Walt. I'm responsible for covering the NAND market at Yole. Prior to Yole, I worked at another MR firm, and prior to that, I spent over 15 years at Micron Technology in a variety of roles. You can read about a few of my colleagues on this slide. I guess the point here is we have a great team at Yole that covers memory with well over 50 years of combined experience in this space. We'll start out by providing a quick update on the NAND market. So first, let's take a look at Q2 2020 results. This would be the April to June quarter, and let's see where things stand in the market. So first, the market's dominated by 6 major players led by Samsung, who had 33% of industry revenue in Q2. They were followed by Kioxia at 18%, Western Digital at 15%, and finally SK Hynix, Micron, and Intel at a little bit over 10% each. Looking at operating margins, Samsung led the way with an estimated 28% profit margin. All of the other suppliers posted positive operating margins in Q2, except for SK Hynix, who ended up with a negative 12% margin. So improving margins in Q1 and Q2 of this year provided much needed relief to the market after significant losses that plagued really all of 2019. And although SK Hynix NAND margins remain negative this quarter, its relative competitive position has been improving as of late, and I suspect the company will continue to narrow this gap with the competition in the coming quarters, as they've been executing pretty well on technology. Currently, the 6 major players account for about 99% of industry revenue, but things are going to change in the future with the emergence of YMTC in the market. So YMTC from China has entered the NAND market in recent quarters, supplying low volumes of 32 and 64-layer 3D NAND products, mostly to domestic companies in China. YMTC aspires to become a major player in this space, and they have the resources to accomplish this. They're using a novel approach to building 3D NAND, implementing a technique they've called X-tacking to optimize certain portions of the manufacturing process and increase NAND bit density relative to conventional 3D NAND. Right now, though, they're still pretty small, running about 20,000 wafers per month of 3D NAND wafer capacity, mostly on 64 layers, and that's coming from its manufacturing base in Wuhan, China. So the company in Wuhan has one fab fully operational with a maximum capacity of about 100,000 wafers per month. A second fab in Wuhan is currently under construction, and we believe there's space in Wuhan for a third fab, which would bring the total wafer capacity, in the range of 300,000 wafers per month fully ramped. And that would equate to about 20% of total industry wafer capacity. They are behind the competition in terms of 3D layer counts. They're currently running mostly 64 layer, where the competition's running mostly 96 layer and moving to 128 layer. YMTC is going to attempt to close this gap by skipping 96 layers and moving directly to 128. Historically, we've seen from other suppliers that skipping nodes is very challenging, but we have heard they've delivered working 128 layer samples to select vendors, but it does remain to be seen whether they'll be successful in ramping this node and really closing that competitive gap with the other suppliers. So we've covered the current status of the market. Now let's take a quick look back at its history. The NAND market's grown from well below $1 billion per quarter back in the early 2000s to well over $10 billion per quarter today. This growth coincided with an expanding base of demand. Over the past 10 years, the NAND market's benefited from what I'm calling the smartphone era, really initiated by the release of the iPhone and some subsequent Android smartphone releases. Tablets also included in that. Smartphones have driven and continue to drive an incredible amount of demand for NAND storage solutions. Over the past 5+ years, we've seen mobile growth augmented by explosive growth from SSDs, both in the PC space and from the enterprise data center side, including traditional enterprise OEM demand, as well as demand from the hyperscalers and cloud service providers. Late 2018 through late 2019 was a very rough period for NAND, with a mismatch of supply and demand resulting in significant price and revenue declines. The market was just starting to emerge from the downturn as we exited last year, and 2020 was really poised to be a great year for the NAND market. And then COVID-19 struck, and as we know, kind of the rest is history. The market has remained resilient in the first half of the year, driven by an increase in demand from data center and PC markets as people shifted to working and learning from home, as well as using more online services. But it appears as though the pandemic is putting a big damper on our second half outlook. As a result, we expect revenue to be down in both Q3 and Q4 of this year. But despite the near-term headwinds, our belief is that fundamental demand for NAND is strong and will continue to grow in the foreseeable future. Despite impressive growth for NAND in terms of market size, industry profitability has remained limited. We've already covered that there's a lot of players in this space. We have 6 incumbents plus YMTC on the horizon. This intense competition has led to price volatility, periods of losses for the industry. Over the past 15 years, industry average margins have only been positive 12%. And more recently, the industry suffered through a pretty difficult downturn with negative margins throughout 2019. The market did return to profitability in the first half of this year, but COVID-related demand weakness appears likely to push margins back down in the coming quarters. So to summarize the last few slides, NAND is a large and growing market, but it hasn't been very profitable. Before we move on to Kioxia, I want to provide a little color on how the COVID-19 pandemic's impacted our outlook for this year. The view I'm showing right now is kind of how we saw the market at the beginning of the year, really before the virus had broken away from China and impacted the rest of the world. As I mentioned earlier, our outlook for NAND was very positive heading into 2020. We expected revenue to reach $60 billion, a new record. We anticipated historically low supply growth of only 30%. And we expected strong demand in the data center and a boost in demand from new gaming console releases in the second half of the year. So the combination of constrained supply with growing demand was expected to result in price increases, with full year ASPs up 6% relative to 2019. We expected margins to improve dramatically through the year, exceeding 20% by the end of the year and coming in at positive 16% for the full year. I'm now showing our current outlook at the market, and I'm not going to walk through all these, but I think what you'll notice really across all these metrics is that in the first half of the year, things came fairly well in line with what we'd anticipated. Really, there's some offsetting things with COVID where mobile weakness, consumer weakness was offset by increased spending due to work and learn from home transitions. So that kind of boost in demand offsetted some of the weakness. But as we move into the second half of the year, things are much worse than we had previously anticipated. You'll notice margins now kind of break even exiting the year, ASPs well below what we previously expected, and revenue coming in quite a bit below our previous expectations as well. Finally, I want to touch on our longer term outlook for the industry. We think the NAND market is a growth market. We have revenue expanding through time and exceeding $80 billion by 2025. We also have bit shipments continuing to grow at a pretty healthy clip of about 29% annualized through 2025. Obviously, the market is still going to be subject to the typical volatility of the memory space and face increasing competitive pressures as YMTC becomes a bigger player. But with strong fundamental demand and many HDD sockets that are still available to be filled with NAND as NAND costs continue to decline, the outlook for revenue and bit shipment growth is positive. Okay, let's turn the page now to Kioxia. First, we'll take a look at the history of Kioxia going back to the Toshiba days. I'll also provide a brief overview of the joint venture between Kioxia and Western Digital, and then we'll look at Kioxia's performance across a few vectors, including scale and market share, technology, market segmentation, and profitability. So Toshiba invented NAND flash memory in the late 1980s, and in the following decades they commercialized the product and maintained their position as a leader, both in terms of technology development as well as commercialization. The NAND business grew to be considered a crown jewel of the Toshiba conglomerate. Despite the many successes of Toshiba's NAND business, the company decided to sell its memory unit to a consortium led by Bain Capital in 2018 due to significant financial challenges that the overall conglomerate was facing unrelated to its NAND business. The Toshiba Corporation remained the largest shareholder of the new entity. The spun-off unit, initially named Toshiba Memory Corporation or TMC, changed its name to Kioxia in October of 2019. The consortium that acquired Toshiba's memory unit included Bain Capital and a group of strategic investors, mostly consumers of NAND, including Apple, Seagate, Dell, Kingston, as well as a competitor in the memory space, the DRAM and NAND supplier SK Hynix from South Korea. This consortium bested the offers from several other potential suitors who either had or were rumored to have interest in acquiring a stake in TMC, including its joint venture partner, Western Digital. WD raised legal challenges to the Toshiba memory spinoff, but these issues were eventually resolved in a settlement that ended up extending the joint venture relationship out to 2029. In addition to Bain and the other strategic investors, Japan optical component manufacturer Hoya Corp acquired 9.9% of the entity. When combined with Toshiba's 40.2% stake, ownership of the entity remained in control of Japan-based companies. Now let's take a quick look at the JV relationship between Kioxia and WD. The partnership between the two companies has spanned the last 2 decades and included multiple different JV agreements that have evolved over time. The Flash Ventures JV that we're highlighting on this slide is owned 50.1% by Kioxia and 49.9% held by WD. This cooperative agreement includes co-development of NAND process technology and memory design, sharing of manufacturing and R&D functions, as well as wafer supply agreements. The joint venture provides both companies with access to leading-edge wafers with the benefits of manufacturing scale, while having the benefit of sharing expenses for R&D and Capex. So essentially, you can think of it as the companies getting the benefits of massive scale, but they don't have to foot the entire bill. So speaking of scale, if we take a look at the JV manufacturing capacity here on this slide, the vast majority of JV wafers are produced at its Yokkaichi, Japan manufacturing location, which has total capacity approaching 500,000 wafers per month, which are shared between the two companies in the JV. There's also a new site in Kitakami, Japan. The new K1 fab recently started to ramp up, still running low volumes today. Last quarter, so Q2, this fab had production capacity of roughly 20,000 wafers per month, but we expect that's going to grow in the coming quarters. I should note that Kioxia owns the land and buildings at these manufacturing locations, but the actual wafer output is split between Western Digital and Kioxia. Let's take a look at the joint venture manufacturing capacity in the context of the overall market to get a better picture of where both Kioxia and Western Digital stand. I just want to point out as I talk about Kioxia on this slide and on subsequent slides, and as you see the Kioxia name on charts, keep in mind that I'm also referring to the Toshiba NAND business or the Toshiba Memory Corporation, depending on the time, as the Kioxia brand name only came to be in late 2019. The chart on this slide shows NAND wafer share by supplier. Samsung has historically been the leader in terms of share, consistently accounting for slightly over 30% of total NAND wafer production. Kioxia is next with around 20% of industry wafers, followed by Western Digital at about 15%. In the coming quarters, we expect YMTC to grow and begin to take share from the other suppliers. But today, the combined JV wafer share of about 35% represents the highest wafer share in the industry, even besting Samsung. If we hide the other players, this becomes even more clear visually. The JV NAND wafer capacity between Kioxia and WD is the highest in the industry, and it provides both companies with the benefits of large scale. Next, let's look at Kioxia's NAND revenue in the context of the total NAND market. The orange bars in the chart show Kioxia's revenue over the past 5+ years, with total NAND revenue in light gray in the background. The line going across the middle of the chart shows Kioxia's NAND revenue market share. You'll notice that since 2015, Kioxia's revenue has trended higher and moved in line with the overall industry, including the downturn that spanned much of the last year. Throughout these revenue fluctuations, the company has been able to maintain a fairly consistent market share that has fluctuated between the high teens to low 20% range. If you recall from the prior slide, this is fairly well aligned with Kioxia's revenue share. Kioxia has consistently held the second position in the NAND market, trailing only Samsung. On this slide, we'll examine Kioxia's competitive position relative to the total memory market, which is going to include DRAM, NAND, NOR, 3D XPoint, etc. You'll notice that the leaders here are the suppliers that are producing both DRAM and NAND. The largest overall memory supplier is Samsung, followed by SK Hynix, followed by Micron. Then you get into the memory suppliers that are primarily focused on NAND, including Kioxia, Western Digital, and Intel. Intel also produces 3D XPoint, but it's a relatively small portion of their NSG business unit. Finally, there's a few smaller players on the slide here that are based in Taiwan. In the context of the total memory market, Kioxia's share has been below 10% in each of the past 4 years, which you'll see in the chart on the right. Kioxia faces some challenges by not having DRAM in its portfolio. For one, DRAM has been much more profitable than NAND since the DRAM industry consolidated to only 3 major players. This has allowed Samsung, SK Hynix, and Micron to generate significant profits from DRAM, which helps them weather the thin and sometimes negative profit margins in NAND. Even as the DRAM market has softened in recent quarters, it is still much more profitable than NAND. Aside from financial reasons, there are some market-based challenges as well that Kioxia faces. A significant portion of the smartphone market requires MCPs, multi-chip packages, which contain both DRAM and NAND. The NAND-only players are essentially excluded from the MCP market since they don't have captive DRAM production and would have to buy DRAM at market prices from their competitors. Additionally, there are some R&D synergies and equipment reuse between DRAM and NAND, which is another competitive advantage benefiting Micron, SK Hynix, and Samsung. Next, let's talk about NAND technology. So this slide's looking at the 3D NAND roadmap for the 6 major suppliers plus YMTC. Samsung was first to market with 3D NAND, and we expect they'll maintain a narrow lead going forward, just given their vast resources and their history of strength in technology. But let's focus on Kioxia. So they were, arguably the technology leader in some of the final generations of planar or 2D NAND. But given their strong position in 2D NAND, they were a little bit slower than some of the other suppliers in transitioning to 3D. Today, Kioxia is competitive in 3D. They're running significant volumes on both 96 and 64 layer. Their next node, and the node for WD as well, is going to be 112 layers. That should be ramping up later this year or early next year. Choosing 112 layers is somewhat of an interesting decision, as most of the other suppliers are shifting to 128 layers. The 112 layer die will be a double stack of 48 and 64 layer NAND. Using asymmetrical stacking is unusual. On the surface, this puts Kioxia at a competitive disadvantage because higher layer counts generally correspond to higher bits per wafer and lower cost per bit. But by moving to 112 layers, Kioxia is able to extend the useful life of its 48 layer equipment, therefore saving capital. What we're hearing is that they're going to take a similar approach for the next node following 112. We believe that'll be 160 layers, consisting of a double stack using 64 and 96 layer NAND. That differs from the competition, which we expect is going to settle around 176 layers. So again, I think this decision was likely made to increase tool reuse and preserve capital. We do expect on 160 layer that the JV will use a few techniques to offset some of the disadvantages of going with a smaller layer count, including CUA architecture, as well as shrinking litho within the memory cells. So in combination, that should help shrink die sizes a little bit more than otherwise would happen, and that should result in a better node-to-node increase going from 112 to 160. As the inventor of NAND, Toshiba and now Kioxia have always been very strong in NAND technology. Maybe some of their more recent decisions might put this leadership position in question, but I think we believe these decisions have been made for financial reasons and don't reflect worsening technological know-how or a worsening R&D. What we think, we still view Kioxia as a technology leader, and we expect them to remain competitive going forward. So on the last slide, I talked about Kioxia and Western Digital making some decisions with their technology roadmap to save capital. I guess that's a good segue into this slide, which is looking at NAND Capex and capital intensity. The chart on the left shows the JV NAND Capex in orange, with the overall industry Capex represented by the gray bars in the background. The line going across the chart shows the JV Capex as a percentage of total industry Capex. First, you'll notice that Capex for the JV and the industry increased significantly in the past several years to support the costly 2D to 3D transition. Capex is down in 2020 as a result of the recent NAND downturn and uncertainty surrounding the pandemic. The JV's overall share of Capex has been declining and has been well below its wafer share for several years in a row. This is indicative of a few things. First, it shows the benefits of scale that come from having a massive manufacturing base. It also shows that the company's been conservative in its capital spending, of which a few examples were provided in the last slide. The below market spend is probably due to a few factors, including the fact that neither Kioxia nor WD has benefited from the significant positive cash flows that DRAM has generated for some of its main competitors, and possibly due to oversight from Kioxia's owners to conserve capital prior to an IPO. The chart on the right shows capital intensity for the JV relative to the industry. So if you divide the JV's conservative capital spending with combined NAND revenue from Kioxia and WD, the result is the lowest capital intensity in the industry. I think this is evidence of strong execution by the partner companies in generating healthy revenues despite below market Capex, and once again highlights the importance of scale. Next, we're going to look quickly at NAND segmentation. The chart on the top left shows 2019 NAND revenue splits by segment. The two major segments are SSD at 51% of revenue and mobile at 32% of revenue. The SSD bucket split roughly 50-50 between enterprise and client SSDs. SSDs are the fastest growing segment in the market, particularly on the enterprise side, led by massive growth coming from data centers. The chart on the right shows our assumptions around the supplier market shares by major segment. Samsung's a clear leader in the SSD space, and they have a very strong position in the enterprise. Intel's another leader in this space. In fact, really the only space that they're playing in right now, and they're particularly strong on the enterprise side. Kioxia has room to grow in SSDs, but for the most part, they're well diversified and they have a strong presence across most markets. Finally, let's look at profitability for Kioxia. The chart on the left shows Kioxia's operating profits for the past 10 years with operating margins overlaid. You'll notice that Kioxia has been consistently profitable on an annual basis, with massive profits in 2017 and 2018 before losses last year when the industry suffered through a terrible year, and Kioxia dealt with a major power outage at its Yokkaichi manufacturing location that kind of exacerbated its losses. Conditions have improved significantly in the first half of 2020. Margins moved back into positive territory, but the outlook for the rest of this year and into 2021 is, I guess, cloudy given softening market conditions and uncertainty surrounding global recovery from the COVID pandemic. Obviously, Kioxia is still subject to market volatility that comes from industry investment cycles that may result in imbalances between supply and demand, as well as external factors such as trade wars, global pandemics, both of which we're experiencing currently. The chart on the right shows Kioxia's 3-year rolling average operating profit. This metric has been trending much higher over the past 10 years, peaking in 2018 and then dropping last year due to the NAND downturn and power outage. But overall, this metric paints a positive picture for Kioxia, and I think it reflects a stronger, more diversified base of demand for NAND, as we've seen the emergence of smartphones, client SSDs that are displacing HDDs and PCs, and massive growth in the data center. So we've covered several key topics around the NAND market and more specifically about Kioxia. But before we turn it over to Q&A, let me highlight a few things that I hope you take away from today's webinar. First, the NAND market's been a resounding success in terms of growth. Revenue's grown dramatically over the past 20 years. Fundamental demand for NAND is very strong. It's expanded and diversified, and there's still significant opportunity out there to displace traditional HDD sockets with NAND-based storage solutions. However, from a competitive perspective, there are too many players today, and that's before YMTC enters the market in real volumes. We believe the industry needs to consolidate in order to generate sufficient returns, much like the DRAM industry did in the past. Turning specifically to Kioxia, I think we've established that they're a leading player in the NAND market. They've consistently held the second highest market share, trailing only Samsung. Its joint venture with WD's provided the benefits of massive production scale and shared technology investments. Kioxia's profitability has improved significantly over the past 10 years, but the company is still subject to market volatility. And because Kioxia does not manufacture DRAM, they have a less diversified portfolio, a smaller position in the overall memory hierarchy, not to mention they're missing out on significant profitability and cash generation from DRAM that some of its competitors have benefited from over the past several years. And with that, I think let's turn it over to Q&A.
Thank you for your presentation, Walt. We have now received some questions and we'll begin the Q&A session. So first question for you, with the non-market conditions worsening, is now a good time for Kioxia IPO?
Thanks, David. That's a good question. So if you think about, looking back maybe 9 months ago, it was looking like a great time to do an IPO. End of this year, the NAND market was poised for a big recovery through 2020. You had the release of gaming consoles in the second half of the year, which was going to be another boost. Supply was going to be historically low. So I think it was looking to be great. And then obviously COVID hit. The rest is history. I still think, however, that it's probably best to just get it done now. The longer you wait, first, there's no guarantee that the market's going to get better next year. We don't know how the economy is going to respond to recovery from COVID, or how that's going to play out next year. Also, the longer that we wait, it's going to be, there's no, we have YMTC kind of looming on the horizon. And again, the longer we wait, the bigger chance there is that there's an impact to the market from YMTC. So I think it makes sense to get this done sooner rather than later.
Right, thank you. A second question for you, Walt. What impact do you expect the IPO to have on the market?
I don't expect a big impact to the market in the near term. Like first, these kind of things take a long time to play out and work themselves out in the market. But I think you could argue that longer term, this could be a positive for the industry. For one, as a public company, Kioxia will need to show strong margins and strong cash flows. It's possible they'll be more public about data, so there'll be more disclosures. They could talk more about, just be more public about their plans, which could help the industry overall. I also think, I talked earlier about consolidation being needed in this industry. With all of the suppliers being public after an IPO of Kioxia, I think everyone's valuation is out there on the table, and it makes any sort of deals maybe more likely because, again, everyone kind of knows what those targets are in terms of market caps and valuations. So I think long term it's a positive. Near term, I don't expect much of an impact. So yeah, that's kind of where I see that playing out.
Thank you very much, Walt, for answering the question. We are now running out of time, so we'll end the Q&A session. This live market briefing is now ending. Thank you very much again, Walt, for your time and analysis. In 24 hours, you will receive an email link to the presentation that we have recorded. Feel free also to share the PDF presentation with some of your colleagues. Finally, let me remind you that you can find all our reports, tracks, and monitors on our website, i-micronews.com. Also, do not hesitate to contact us if you have additional questions. You can find our contact details on the last slide of the presentation. Thank you all for joining us today. Have a good day and take care.